Hello, and welcome to today's webinar, Benchmark for Growth, How Pest Control Companies Can Leverage Others' Success to Increase Revenue and Productivity, brought to you by Pest Management Professional magazine and our sponsor of the event, Slingshot by WorkWave. I'm Danielle Pesta from North Coast Media, the Digital Media Manager for Pest Management Professional, and I will be your moderator for today's presentation. Before we get started, I want to let you know that today's webinar will be recorded, and you are currently in a listen-only mode. A recording of this webinar will be posted to mypmp.net/webinars and will also be emailed to you tomorrow. At this time, I'd like to get you comfortable with our console and the ways which you can participate during today's presentation. Please notice the Q&A panel located underneath the media player. If you have a question, you can type it into the panel's text box, then click Submit to place your question in queue. You may also use the hashtag PMPWebinar on Twitter to submit questions during the event or to enter into discussions with other attendees. We encourage you to ask and enter any questions you have for our speaker during the presentation, and we'll address these at the end of the presentation during the Q&A. Any questions that were submitted during registration have already gone to our speaker and may be covered during the presentation today. If you experience any technical difficulties during today's event, you can use that same Q&A panel, and Assistant Producer Aurora Harris or I will personally assist you. You may learn more about today's speakers by viewing their photo, bio, and contact information in the panel located in the bottom left-hand corner of your console. And in the upper right-hand corner, you may read more about our sponsor, Slingshot by WorkWave. There's also a Contact Us panel for you to send any follow-up remarks to our sponsor via email. Finally, at the bottom right corner of your console, you'll find a PDF of today's presentation slides, which you can download, and a link to visit the websites of Slingshot and PCO Bookkeepers. Now, I'd like to introduce today's speaker. We will be hearing from Dan Gordon, the founder and owner of PCO Bookkeepers, which is an accounting and consulting firm that caters to pest management professionals throughout the United States. Later on in the presentation, we will also hear from Chris Brasher, VP of Sales and Marketing for Slingshot by WorkWave. At this time, I'll turn the presentation over to Dan, who will kick it off. Dan, over to you.
Thanks, Danielle. Well, I appreciate everything that PMP does for us and for the industry, and happy to be here today. And I guess that picture was probably a couple of years ago, but still looks good, right? So what we're going to talk about, what we're going to talk about today is benchmarking and making comparisons and key performance indicators or KPIs. Those are all, fancy words for the same things. Basically, what we're looking for are data points in our, in our financial statements and our operating statements that we can use to improve our business. So why make comparisons? So in today's competitive business environment, we need to operate more efficiently and profitably, and the need has never been greater. Okay, so benchmarking is simply looking at our results versus something else. So that something else could be past company results. It could be your future budgeted results, meaning you put together a budget and then you do actual the budgets. And then most importantly is the industry standards. And we'll talk about how we can look at those standards and, where you can find them. So let's talk about why make comparisons and ratio analysis. So basically what we're looking for are financial and operational ratios. They're used widely to evaluate the performance of business and to identify possible troubled areas that could result in business failure or reduced profits, okay? And who else would look at your financials or operating statements? It might be banks looking to lend you money, or the leasing company for vehicles, or maybe your vendors for materials, but also managers and owners so that they can determine whether they're doing well or whether, folks who work for them are doing well. And so it helps them to develop internal plans and by comparing to the past, to the budget, and comparing to the industry benchmarks, you're able to determine how you're doing. It's kind of interesting. Some people, especially in our industry, it's mainly a mom and pop industry, right? So if you work for one of the big boys and then go start your own, or work for one of the big boys and come back to your family business, you've got that that understanding of how a big company works and how some of these systems and processes work. But if you go, if you come right into the family business, the only thing you know is that family business. Okay. And so coming to events like this and listening to, presentations about how to improve or how to structure certain things in your business helps quite a bit. And so hopefully today's discussion will help you with that. Okay. Now, what we're going to talk about, one of the, the questions is obviously we can take a look at our data points versus history by printing a P&L for this year versus last year, or going into your routing software and printing off something this year to last year. And that's pretty easy. Going against budgeted, you create a budget and you can look at that budget to actual. But something really interesting that we did, because we work with hundreds of PMPs across the country doing their accounting, and one of the first things that we do when we take over or start working with our clients is we organize them so that they look like all of our other clients in terms of their reporting. And what that does is that allows us to make comparisons. So what we did is we did this cost study where we took I think it was 130 or 140 clients. Even though we've got many more than that, we knocked out certain clients because either they were too big and they'd skew the data, or too small and they weren't all that relevant, or maybe 50% of their revenue is lawn care, and so that skews the data. So we came up with this ideal sample, and we put them all together, and then we divided by that number, and we got the average for all the KPIs on the on a P&L, what yours should look like. Okay. And by the way, if you want to see the study, you can go to our website. It's PCOBookkeepers.com. It's it's pretty lengthy. It's pretty interesting stuff, but it's definitely worth the read, and our staff spent a lot of time putting it together. Let's see. Okay. So it was such a fun effort that we got together with Marty Whitford over at North Coast, or PMP, and he and I wrote an article together about the cost study, and we won an award for trade magazines. It was like the Emmys of trade magazines, and obviously when I told my kids what a rock star I was, they didn't believe me because, it's trade magazines. But anyway, I thought that this was really kind of telling, that our data was really good. And obviously PMP picked it up because, they thought that it was interesting. And so we won this award, and, kind of lends credibility to what we're going to be looking at today. Okay. So how did this study work? Or the data integrity? Where does our data come from? So the study contained data from 157 firms in 37 states. The median employee count, revenue per employee, revenue per customer, and mix of services were tabulated from the data reported. So basically, we had 157 companies that totaled $323 million of revenue. And what's really, really interesting is if you look at, 22% of the average was commercial, 43.5% was residential, 21% wood destroying, 4.5% bed bug, 9% other related. This is really interesting because if you look at the big boys in the industries, the Terminixes, the Orkins, the Rentokils and whatnot, and you want to kind of benchmark against them, and remember they're public companies, and a lot of the information that is in our study is actually in their annual reports or their 10Ks, but some of it's not. Okay, but this is kind of interesting in that this average marketing mix looked kind of like Terminix, right? That with their commercial and their residential wood destroying, et cetera. Okay. In certain aspects, Orkin has more commercial, but this is really kind of interesting. So, our data is supported by those companies that are doing over $1 billion, to say, well, what is it that we're looking at? And again, some of the drill down you'll never be able to see from those public companies because they just don't publish it. But if we know that the top level information is congruent with theirs, then what we see is that our drill downs probably are pretty spot on. And if we believe that those companies are well-run companies, we want to emulate them. And so we've got that information. So I'm trying to hit down arrow, but that doesn't work in this environment. I have to hit the little arrow. Okay. So in order to put this together, the industry chart of accounts. So I said when a client comes to us, what we do is we change their chart of accounts. A chart of accounts is nothing more than, like in QuickBooks, how you categorize things. Let's say, forget about computers. If you had a checkbook and you wrote checks all day long, the memo section is the chart of accounts, right? So I write a check to my insurance company and I put it in as insurance, to my fuel company and put it in as fuel. And when you compile all of those insurance checks, that makes up the insurance line on your chart of accounts, and the fuel on, will make up the fuel line. So what we do is we have our chart of accounts that we've developed over the past over 20 years. That chart of account is not that different from a lot of the big players, right? There's no magic in it, but, ours is maybe a little bit different. And then, those large companies have CFOs who, may want to, deviate a little bit from the chart of accounts and whatnot. And there's accounting theory arguments that you could have over, certain direct costs, whether they should be general and administrative or direct and whatnot. But for the most part, our chart of accounts follows the gross margin method of calculating income. And so in order to derive the useful information from the financials, we have to have everybody comparable. And so that's what we do when you sign up with PCO Bookkeepers. So that said, as before, how do we compare? We can look at things as a percentage of sales, what percentage is labor, what percentage is marketing. Actual to budget, which we discussed, actual to prior period we discussed, and actual to industry comps, which we also discussed. Okay, so several things we looked at. The first thing we looked at was profitability. So the income statement is one of the major financial statements used by accountants, financial institutions, and business owners to determine their profitability. Okay. Most people who run pest control companies, managers, owners, et cetera, know how to read a P&L. It's basically, here's the money that comes in, or the production that comes in, revenue that comes in, and here are the expenses, and the difference is net income. Okay, not real difficult. Okay, however, we also looked at the balance sheet, and unless you have a bookkeeping background or an accounting background, you probably don't know the nuances of a balance sheet. But the balance sheet's a report that summarizes all of an entity's assets, liabilities, and equity as of a given point. It's typically used by lenders, investors, and creditors to estimate the liquidity of a business. The reason that those folks want to know liquidity basically means, do you have the ability to, pay your bills, right? So the more cash or cash equivalents you have on hand, the better position that you're in, okay? There's a couple of things that you need to remember when looking at a balance sheet. A balance sheet is not a statement of net worth because we as accountants record things at historic cost, okay? When I say that, what I mean is that if I buy a truck for $30,000, it sits on my books for $30,000, and there is a number called depreciation that I can take and just assume 5 years. So I take $6,000 of depreciation every year, and so you net it for the net book value. But at the end of those 5 years, that book value will be zero. But we know that that truck has value, and so so it's not so the balance sheet will show that it has no value, but we know that it does have value. That is important because one of the largest assets that you have sitting on your books, or I'm sorry, not sitting on your books, one of the largest assets you have is your customer list, right? And unless you purchased your company, it's probably not on the balance sheet, yet that's the largest single asset that you have. And that's one of the reasons that banks are not familiar and really need to be educated before they lend us money. So getting back to liquidity, it's a measure of quality of adequacy of current assets to meet current liabilities as they come due. Can you quickly convert assets to cash without a loss in value in order to meet immediate short-term obligations? Okay. Let's see. I am looking at some questions that are coming in. Danielle, I don't know if I'm if I'm looking at the right thing, but in the inbox, I'll let you handle that. For firms that can readily and accurately predict their cash flows, focusing on liquidity is not nearly as critical as it is for firms that make their money by completing large projects. In other words, because we're in the recurring revenue business, we know how much money approximately or revenue we'll do tomorrow. Whereas if we had a candy store, if people don't show up to buy our candy, then we're going to have a difficult time predicting our liquidity. So pest control in general, if we're running it right, the liquidity is usually very good, meaning that we don't have to keep a ton of money in the company in order to meet the rainy day needs. Okay, so let's talk about liquidity ratios. The liquidity ratio, there's three of them. Anybody who's taken an elementary finance course, the current ratio is current assets over current liabilities. Current asset would be your cash, it would be your accounts receivable, it would be your inventory. Your current liabilities would be your accounts payable, might be the credit cards payable if you use credit cards in your business. It might be the current portion of any long-term debt that's coming up, maybe your truck payments, et cetera. And so what we look for is in that current ratio, we look for that number to be, well over 1, right? Because even though you've got these current assets, your accounts receivable, I can't just flip a switch and have them collected. My inventory, I don't turn that into cash immediately. So the only thing that I could pay my bills with this afternoon would be my cash, right? So we look at the current ratio and the average current ratio, or I'm sorry, the median current ratio, which I think is more important than the mean here. The mean is average. Remember, averages can be skewed, and we tried our best to pull the outliers out to create the averages so that they are the median. The median is the midpoint. For example, if I sat down with you and we each earned $100,000 a year in salary, and we sat down with Mark Zuckerberg, and so the three of us, if we took our average salary, it'd be $1 billion, right? But that's meaningless, right? So what we would want to do is take the midpoint, would be the person in the middle with what they're earning. And so we were able to scrape off a lot of the outliers so that the median and the mean are roughly the same, but just so that you understand it. So the current ratio, meaning that our current assets over current liabilities, we're about a 1.87. Quick ratio is basically just cash and AR, no inventory, over your current liabilities, where it's 1.69. And the acid test, which is just cash over current liabilities. In other words, what do I have in the bank and can I pay it today, is a little bit less than 1. Now, if you talk to any accounting professor or accounting or finance professional, they would say, gee, you want to be at 1. You want to be able to handle all of your obligations. But the fact is, because we're in a recurring revenue type business, that number can be a little bit less than 1 because we know money's coming in tomorrow. Okay. Other ratios that we looked at were called activity ratios. A lot of times what we look at is our revenue per technician, but that's not always, I mean, that's very helpful and it's really good, but revenue per employee is also an important number to know whether we're top heavy. How about revenue per customer? How about profit per employee, or the number of days of sales in my accounts receivable? Okay, so these are all some of the activity ratios that we looked at. And so let's go and take a look at some of these. What we did is we looked at the average commercial account for our average, for our sample company or our model company. The average revenue per commercial account was $1,439 per year. Residential $418, wood destroying $793, bed bugs $704, and other related is $847. Okay, this is kind of interesting. Our average, so remember we took that the 157 companies, divided it by the $323 million, and our model company was a company that was doing $2 million in revenue. That $2 million in revenue had 11.5 technicians, 3.1 office staff, 2 salespeople, 1.4 supervisors, and 1.1 managers, for a total of 19.1 employees, or $107,000 per employee. Okay, kind of a few of the things that are kind of interesting here is that our average technician, the route is average about $180,000. Most of our clients, that number seems a little low. Our best-in-class clients are probably doing about $20,000 a month per route, so about $240,000. Okay. Now, leverage ratios. How much debt can you stomach? Okay, and a lot of banks will look at this. A lot of credit companies will look at this, people who are giving you credit, okay? And when we look at, anytime we look at something called debt to equity, anytime we look at the word equity, that's kind of a nonsense number in a small family business, because debt and equity kind of meld together. In other words, I'm the owner of a pest control company. I can lend the company money, then it's debt. Or I can contribute it to capital, that's equity. And again, the other thing that changes all of this is my big asset, which is my customer list, which is not on there, okay? But banks will look at this, so that's why we put it up here, and you've got to explain it. So in other words, my debt ratio, which is kind of, that ratio is a good ratio. Basically, it's how much debt do I have on my total assets? So I have a house that's $500,000, and I have a $300,000 mortgage on it. Therefore, my debt ratio is 60%. Okay, so that is a good one. And in our average, or actually the median debt ratio for the study was 0.72. In other words, your debt for the assets, the bank owns 72% of your assets. Okay, and moving along, these are profitability ratios, and these are the ones that I really like to focus on, because this is how you improve your business. The gross profit over revenue. What is gross profit? So when we take our revenue minus our direct costs are all costs associated with putting a person on the road. That's the technician wages, that's their vehicle, that's their fuel, that's their chemicals, et cetera, et cetera. So if I sell my service for $100 and all of those things that I just mentioned cost me $50, then my gross profit is $50 or 50%. Okay. If it cost me $45, then my gross profit is $55 or 50% or 55%. Okay. To me, that's the single most important KPI in a pest control company, because that determines break even, and that determines two things: how efficient your routing and your pricing. Okay. Routing efficiency can be corrected. Pricing is a very difficult one to correct. Okay. So that's important. Our operating expenses are just basically the non-direct costs over revenue. And then our profit margin is our net income over revenue. And then we have something called EBITDA, which is earnings before interest, taxes, depreciation, and amortization. And that is what a lot of people call cash flow, how much money is coming into the company. Okay, so let's take a look. So our gross margin, when we did the study, we actually broke it into the functional areas, the commercial, residential, wood destroying, and our average gross profit was about 52%. Okay, so best-in-class companies we know are at 50 to 55% gross margin, and their operating expenses are 42% of total profit. Profit margin is about 10.21, with EBITDA being about 13.74. Okay. Now, best-in-class companies provide about 20% to ownership after you add back all the items. And you say, well, where does the rest come from? It comes from salaries to ownership, other toys that might be in, a spouse's vehicle. I know that doesn't happen at your company, but, it happens at a lot. But best-in-class companies show about 20% to owner. Okay. And this is just a picture of, if you go on our website, PCOBookkeepers.com, these are all of your KPIs from the study. This is exactly what it is. Technician labor for commercial should be about 20.7%. Again, that doesn't include payroll taxes or health insurance in it or anything. And it's pretty much 21% for residential. Wood destroying is a little bit lower, but then again, materials are a little higher on wood destroying, bed bugs, et cetera. So if you're in the low 20s, you're doing well, right? And then your vehicles, 7 or 8% right across the board, all in: leasing, fuel, insurance, repair, maintenance, and your materials. And again, it all depends on your materials for, which type of work that you're doing. You notice termites is way higher than the others, okay? And then this gets you to that gross profit number. But take a look at our website, PCOBookkeepers.com, kind of interesting stuff. Other items that we look at are the revenue per customer that we talked about before, and direct labor. Direct labor is extremely important. It was on the previous slide right here, up here, but I've been doing this for a long time. There's 3 things that will make or break a pest control company: keeping your labor under control, meaning technician labor, sales labor, office labor; keeping your marketing under control. Anybody who does digital marketing knows that, that cost per lead, cost per conversion, cost per sale can be extremely high. That has to be watched. And then your materials. So if you can watch those 3 things, you'll have a successful company. You can run around the office and try to save money on office supplies and paper clips and things, but you watch those 3 things, you'll have a profitable company. So anyway, we're a little over 20% for labor, meaning technician labor, direct labor with nothing else in, no payroll taxes, no benefits. Number of office people to production people, that's 4.1. That's kind of an interesting number. But if you're in a residential business where the phone's ringing off the hook, that's the number. If you're in a commercial business where the phone doesn't ring much, that number actually goes up a little bit. And the average mature company spends about 6.3% on marketing. Difference between marketing and sales. Marketing is all the money that you spend to bring a lead in. Sales is all the money that you spend to close that lead. This is just to bring the lead in. Okay. Now, the other things that you can compare yourself against is the rest of the industry. So we've done this cost study, which is pretty cool. Okay. But we've also teamed up with the investment bank William Blair, and there is an analyst there named Tim Mulrooney. Tim covers the pest control industry for people who want to invest, like pension funds, private equity, et cetera. We're a real industry that's followed by many analysts, just like IBM and everything else. And Tim is the preeminent expert, I think, in pest control. And what we did is we got together with him and we supply him with blind data. In other words, it's not attached to any names, but we assign it or give it to him each month. And his analysts slice it and dice it and then come up with what the industry's doing in terms of growth. What's really, really interesting is we do this every month, and you can see it on our, we have a different website. We actually do exit planning services. This is on sellmypcobusiness.com. But the really interesting, and you can see what the report says, and it comes out every month. But the interesting thing about this is if you look at Terminix and Orkin and Rentokil and Ecolab, they report once a quarter, and they're a month or more lagged, right? We report every month, and so we're a pretty good indicator of what that's going to look like in those public companies. And for anybody who's taken a statistics course, the R-square, which is the correlation, I mean, we are so highly correlated with those large companies, meaning that our indicators are a terrific, or our growth numbers are a terrific indicator of what's really going on in the industry, and further proved by when the big boys come out with their numbers. So this is a real interesting one. This is called the pest, what you're seeing is some very large numbers for April, May, June, really high growth numbers. And it's kind of artificial because last year, if you remember, the whole world was shut down. So you're coming up against easy comps. Toward the end of the year, those numbers won't be as high. But again, extremely highly correlated to the big boys. And if we assume that that's the industry, because some of the big boys make up most of the, if you take the top 10 revenue producers in the industry, that's over 50% of the industry revenue. So we're able to look at that. So this is something that you can look at on our website. It's sellmypcobusiness.com, and happy to share that with you. By the way, there's no cost for any of this. The industry's been real good to us, and we want to be thought leaders, and we want to put that information out there to share with folks. The other company that's actually doing an estimate of the size of the market is a company called Specialty Consultants. And every year they come out with their estimate of how the marketing the market is growing, the pest control market. And we estimate the top 10 companies doing 66% of the market. And our numbers support specialty consultants, and specialty consultants support us. So the more independent sources that you can put together that all say the same thing, the more reliable or that you can depend on it more. And so that's just another one of the sources that we can look at. So in May, we increased 16.2%, and you can read about this. What's kind of really interesting is that it shows that our industry is extremely healthy compared to the big boys, and you can look at the current valuations. So like when you hear about, well, this company sold for 2 times revenue or 3 times revenue or 1 time revenue, they're not really selling for that. That it's expressed that way, but really it's a multiple of that EBITDA number. And so if you say that your EBITDA is 20%, a company that sells for 1 times revenue would be a 5 times EBITDA. If it sold for 2 times, it would be 10 times EBITDA. If it sold for 3, it would be it would be 15 times, right? Look at Rollins, 32 times. Terminex is like 17 and a half, Rent-A-Kill a little bit less, and Ecolab, both Rent-A-Kill and Ecolab are not pure pest play. Terminex and Rollins are, so these numbers can be a little bit skewed, but basically what we're saying is that our industry is pretty darn stable, and the investment community likes us very much, judging by the multiples that we're getting, as well as the multiples that people are selling their businesses for. So if you want to see these reports, take a look at sellmypcobusiness.com. They're all up there. Happy to have a look. There's no cost. And if you are interested in any type of our accounting service, which is a whole lot different than most CPA firms, we are CPAs and enrolled agents, but we do our reporting is quite a bit of operational stuff, a lot of comparisons to industry and things like that, as opposed to just a P&L and a balance sheet that, is used to prepare your tax return, which we also do. And if you're interested in our services, take a look at PCOBookkeepers.com. And with that, I open it up to questions.
Great. Thanks, Dan. I appreciate that. So yeah, at this time, we're going to jump into some questions we received during registration and a couple that we got during the live event as well. So the first question I have for you, Dan, is what is the fastest way to grow a pest control company, buying and or marketing?
The answer is yes. Both, right? The thing about, if you're a shrewd marketer, you're able to, let's say that even on a bad day, your cost per lead's $250 or so, and you're closing at 50%, and so it's $500 a sale. And let's say that sells a quarterly program that's going to get $125 a quarter or $500, right? Well, unless you've been living under a rock, you know that companies are selling generally more than 1 time's revenue. So, yeah, marketing is a good way to do it. If you want to buy a company, you're probably going to pay more than that, and you may or may not get the company that you want. The other thing is that, again, unless you've been living under a rock, you know that the M&A market is extremely hot in our industry, and therefore you've got these really large companies that are bidding up the prices. And do you really want to get in that game? If you wanted to get in that game, my recommendation is to do it with really small companies, because the really large companies are not looking at the real small companies, because it takes a certain amount of work to do a transaction, whether it's 100,000 or 10 million. So, but I recommend that you keep your ears and eyes open and do both.
Great, thank you. Another question. In your opinion, which KPI is the most important one to track closely?
So I said that in my presentation, gross margin. And the reason that gross margin is so important is that is going to tell you whether you're pricing things properly, whether your route efficiency is good, right? So let's say that I sell my service for $100 and it costs me $50 for those direct costs. And so I have a $50 gross profit or 50% gross margin. Let's also say that I have an office that costs me $100,000 a month to operate, meaning rent, utilities, CSRs, everything, right? At a 50% gross margin, my break-even point is $200,000, right? So the first 50% goes to the direct costs, and the second goes to the indirect costs. And after I do $200,000, I start making money at a rate of 50 cents on the dollar. Okay. If we drop that that gross margin to 25%, right? Then it would cost me $400,000 a month, or I'd have to do 400,000 in business just to break even. So it's really, really important to look at that gross margin, and that gross margin should be 50 to 55%. We definitely have clients who are higher than that and some clients that are lower than that, but that's the slot you want to be in.
Okay, great. This one's a little bit longer of an explanation for you, but this viewer asks, where do you find the information, to measure against other companies? They say, they know their data, but they struggle with finding data on companies of a similar size for their comparison. And their KPIs have evolved as they've grown. So what was important to measure as a single operator compared to what we measure at now with a group of 10 to 15 people? As they continue to grow, it will continue to evolve even more. So what would you say to that?
Yeah, so your ratios, doesn't matter what size you are, right? Your labor percentage could be, as a 5-person company or as a 1,000-person company, right? So your ratios aren't going to change. Maybe your office, if you're a 1-person company, you do the bookkeeping and run the route and everything else, so that'll skew things. But in general, especially your direct costs are going to be the same as all other big companies, right? They're running the same margins. So where do I get the information from? Go to our website, PCOBookkeepers.com. That's take a look at the operating cost study, or I forgot which issue that article was in of PMP, but you can take a look and read that article. Maybe you can send that out to some folks.
Sure. Yeah, that sounds good. We have a few other questions that have just come in.
Sure.
One is, do you do any studies in the Latin American markets for the pest control industry there?
No, the reason I don't is because we don't have any clients there. We're accountants first, and we know U.S. tax law and U.S. accounting and whatnot. So that's why we don't really strike out outside the country. Although our M&A business, we definitely buy and sell businesses that are outside. We're doing actually a couple of deals in Europe right now. And so by all means, if you're overseas and you're interested in that kind of thing, definitely contact us.
Okay, great. Great. And then someone was asking, we had a few questions about the office staff to the production staff ratio. Could you elaborate on that a little bit more? And could you let us know if that also includes like maybe sales reps or admin staff, like human resources? Yeah,
it all depends on what your marketing mix is. Again, if you are a commercial only company, we have a client that does $15 million of commercial business, and you go in their office and the phone's not really ringing, or, you don't have that buzz that you have in a residential company in the springtime when everything's swarming. That company where everything's swarming, that residential company needs more than the commercial, but it's 4.1, field force people to every support person. And one of the things that we're noticing in the industry more and more is that there's less and less are they sending out on the road salespeople. Obviously, sometimes for termite work and other complicated things, or commercial, you send somebody out. But a lot of the work is being sold over the phone through call centers now.
Again, I got a follow up to this one. You kind of referenced it quickly, but how is seasonality played in this one? I mean, is it higher when techs aren't out as much, during wintertime, or there's not getting as many phone calls? I mean, how does that ratio change during for seasonality?
It's kind of interesting. Yeah, I mean, obviously, it's all hands on deck when the phone's ringing off the hook. But if you design your company properly, like make all the renewals due in the winter and things like that, the phone may not be ringing, but the people in the office are still busy. You're doing budgeting and things like that. But you're absolutely right, Chris. If in April, May, June, depending on where you are, you can never have enough people in the office to answer the phones.
Great. Well, thank you both. Chris, would you like to go ahead and say a few words from Slingshot by WorkWave now to round out our presentation?
Yes, I'm here. I was talking on mute. So thank you, Dan, for that great presentation. You know, when you look at how to gauge your company, I love the use of ratios because it takes, and if you're a small company or a mid-size or a large company, the ratios are pretty similar. And it also gives you a great understanding of how you compare, even though you may not be exactly the same. And so that's great. Thank you so much. And there's probably even some activity ratios, as we've talked about, office staff, in your ability to service and balance service and sales. And so I'm going to talk a little bit about that with Slingshot, and I'll have some questions for Dan as we get started too. But for everyone's benefit here, my name is Chris Brasher. I'm the VP at Slingshot by WorkWave. I oversee the sales and marketing for Slingshot. For those that don't know what we are pest control experts. We're a multi-channel contact center, and we do more than 3 million customer interactions and $100 million in sales for our clients. We're essentially an answering service, and we work with some of the largest and some of the smallest. And so a lot of I'll call them my ratios, Dan, but a lot of the ratios that I'll talk about are based off of over 3 million interactions over web chat, text, and phone. We work with some of the largest, 30% of the top 100 companies, and we also work with one-man shows. So let's go ahead and get started and talk about some of these. The first one, Dan, in your experience, we've done this with over 3 million interactions. Again, 25% of calls happen, after hours. Have you ever talked to any of your clients about their experience responding to those?
Yes, I don't have any KPIs on that, but I do know that, the question in spring, should we stay open an hour later or 2 hours later or 3 hours? And when does it stop, right? And the calls come in, at all hours. So I don't have that kind of information. But one thing that I do know is that the person who answers the call or, either on the phone or through email is usually the one that gets the job.
Yeah, that's great. Very, very important. And if you don't answer it, only about 1 in 5 will actually leave a voicemail. So a lot of times, pest control operators are coming into the office Monday mornings or Tuesday mornings and listening to voicemails, and they'll have 5 or 6, but they've probably missed another 20 that haven't left a voicemail. The other part is if you're really busy, 60% will hang up after just 60 seconds on hold, and that's for sales calls especially. New customers have a tendency to hold up for longer if you have a queue in the office, but you don't want these to be hang up and move on to the next provider, which is, I think, right here, what you're saying, Dan. 74% will pick the vendor that responds first. And so this is a big balance. I recognize this is managing or having the right amount of office staff to take those calls is really what I'm going to show you in this next slide here. With that summer volume, March through August, where it's so much volume that you have to either hire a lot more CSRs or office staff to reduce hold times. But even then, with how busy and how crazy this industry has been, it's hard to manage service level. It's hard to get to each of those phone calls. And when you add that with a labor shortage market right now, it gets harder for everybody. And it's something that our clients are still figuring out. It's something that we are actively always figuring out. And to get the right service level, we like to call it the utilization service level kind of Goldilocks, where you don't have to overhire and then fire during the slow seasons, but you stay kind of that medium, and then you can send the calls to Slingshot. And so if we wrap up all of these challenges together, this is kind of why we exist, why we're an answering service for this industry. Again, 25% of sales calls after hours, 74% of those select the vendor that responds first. That's really important for web leads. And then 60% will hang up after just 60 seconds. And then text messaging is always becoming a great channel. And so I'm going to go ahead and jump into a little bit more about our platform. And the things that people may not know about us is that we're industry specific. That means that we are ready to support, sell, and schedule as experts. So if someone calls in Monday afternoon at 5:30, that 1 hour where you weren't sure if you should be open, or if someone's calling in Monday morning and you're too busy to answer all the calls, you can send your overflow, your after hours, your weekend traffic to our agents at Slingshot, and they can speak to pests. They can support you and understand your language, understand your company, and even sell and schedule, take credit card payments, take auto pay payments as well, and then help you get them on a route. Where 70 to 90% of sales still occur over the phone, and so we can help you answer those first and fast. We're also CRM enabled with many of our partners, especially with WorkWave and PestPack. It requires very little extra back office work. We also have agents that can log in on your behalf and actually make changes in PestPack. And then for other CRMs, it requires very little. Sometimes a copy and paste and credit card information, but we can usually integrate any new sales that we make on your behalf into your CRM. And then we also have sales expertise with built-in automation, and I'll go through some of those. And so to give you guys an idea, everyone, of how it works, for any of these lead capture places, whether it be text, Facebook Messenger, phone calls, social media, or web leads, they come into our lead capture system. Our agents are assigned to answer those calls as fast as they can, and then we go ahead and qualify, sell, and schedule, and then you're left to service and make that customer happy. As I said before, we also have a live chat function as well. So many people in our industry will have live chat. There's other competitors in the industry that have live chat, but it's usually self-managed. And so that's why there's not much value in it. They don't find the value. So what we offer you is a fully managed chat service where we could actually answer those chats for you. We can actually get them on the phone. We can have them call the office to schedule something, or we could try and do it via live chat. So that's a fully managed chat service. We also do text messaging. And so your customers can text your phone number, and you can talk to them. They can send images to that phone number as well. You can talk to them within our dashboard. But with that chat and the text messaging and any web leads that come in, we have a really advanced provisioning tool that says, hey, we can do it immediately. We can do it if you don't respond within 30 seconds. We can do it if you don't respond within 5 minutes. And if you're not able to get to any of those, then our agents can jump in and help respond and take care and sell those leads for you. All of this you receive these customers in our inbox. It's our dashboard. So whether we're managing the leads during the day or Slingshot does after hours, all of your engagement will be viewed in that same single screen. And you'll see here just some of the interaction details and customer details of those services that we provide. The other piece I like to mention, not only do we do sales, we also do customer support, so we can help reschedule, take messages, answer questions about payments. We can also do outbound sales for previous customers, and we can also help with some AR or some aging account that you might have. It's a great way, like Dan says, if you're trying to grow and you're looking to grab new customers, so you're thinking about getting acquired, that's a great reason to get started. The other part I like to say is that we're ROI positive. As you're considering all of those marketing dollars, I think, Dan, you said it was about 6-7%. We track every revenue that we make for you, and we can understand, okay, you sent us 100 phone calls. We were able to close 55 of those into new customers for you. And so your sales opportunities go up, your hold times, because you've transferred those calls to us, go down, and now you have a significant increased revenue. And it's not uncommon to have a 4 to 8x ROI off of the annual contract value that we sell on your behalf.
That's a tremendous number, Chris. That 4 to 8x is really, really good. If you think about that, when we say that marketing costs are 6.3%, that's 6.3% of total revenue. But of new sales, you're at 25 to 50%, meaning 2 to 4 times. So that's really good.
Yeah, thank you. And I just flashed this up here. I got a couple of examples, both with Antisemics and with ABC Home, or clients of ours, who have actually achieved that 8% last year at this time. Viking, one of our clients, did, over 107,000 in revenue, and our portion of that was $12,000. And these were, of course, missed calls through overflow or weekends or after hours. Same thing with ABC Home is one of our clients, and almost a 10x return on their investment. And it's all about getting back to those leads as fast as you can and not having them, put on hold for too long, and also responding to your web leads that come in on your website. The last piece that I just wanted to share is you evaluate Slingshot, plus with that ROI. I don't know if you're able to find a $10 per hour agent right now. This is out of date for me, but getting an agent just to answer inbound calls Monday mornings when it's busy, every lunch period when it's busy, the 5 to 8 o'clock each night, plus Saturday and Sundays, that can cost you a whole lot of money. And again, use the ratios that Dan recommends here to find out if you should be optimizing for it. Just with what's been going on in the labor market, we find that it's everybody's challenge right now to have the agents in-house. We're having more calls than we've ever experienced before because of everyone's trying to figure out how we can optimize the labor that we have and the phone calls that are coming in. And, something I think we thought we figured out with COVID, and then something else happened, and it was needed even more. So, it can cost you up to $50,000, and Slingshot is a lot less expensive option than having to hire someone full-time just to answer some of those extra calls. And it's a per-minute rate. We listen and look at your volume to find out what might be best for you, and then provide you a custom quote that is based off of per talk minute. And then we give you a great opportunity to get those sales you wouldn't have got that would have been a deal otherwise gone to your competitors, and that's what we want to help avoid. That is the end of my presentation for Slingshot. Again, I'd like to take a chance, I know Dan will as well, and thank Dan and PMP for the opportunity to present. We're here to help with your overflow after hours and weekend calls, and we'd love to do that. Feel free to contact me at chris.brasher@getslingshot.com, or you can just go on to getslingshot.com. Anyone that sends me an email, I actually have a link to our swag store that you can get yourself a T-shirt or a hat or a water bottle. But you can email me there at chris.brasher@getslingshot.com or at workwave.com. Both of those work. So that will be my part, and thank you very much, PMP. Danielle.
Excellent. Thanks, Chris, and thank you, Dan. Thank you both for a great presentation today. Now we're just going to wrap up the live event real quick. So I want to thank all of you for attending today's webinar, Benchmark for Growth, brought to you by Pest Management Professional Magazine and our sponsor, Slingshot by WorkWave. If you have any additional questions for the speakers, you can reach out to them directly via the contact information that you see there on the slide. And a recording of this webinar will be emailed to you tomorrow and posted to mypmp.net/webinars. And we'll also post any other upcoming PMP webinars to that page in the future. So thank you all for attending, and we hope you'll join us again for another great webinar soon.